General Motors has revealed it will invest $3 billion in its joint venture with Samsung to make cylindrical 4680 Tesla-like batteries in the US. On the same day, they revealed that the Bolt and the Bolt EUV will be officially dead by, around about the third quarter, end of the third quarter, start of the fourth quarter of this year. And then they revealed their revenue, profit, and their future production probability. Hello, my friends. Welcome to the channel. It's great to see you. Thank you for tuning in. My name's Sam Evans, and here are GM's Q1 earnings. Employee and dealer buyouts pushed net income down 19%. North American pre-tax profit rose 14% in the fourth quarter to $3.6 billion. However, GM are about to spend $4 billion now, currently they're in the process of doing it, to revamp their factory in Michigan in order to stop selling Bolts and Bolt EUVs and start selling Silverados and GMC Sierras that are built using the Electric Ultium platform, which is really good news because we need to get people driving those big, thirsty gasoline, diesel pickup trucks into electric versions. It's a much better choice. General Motors on Tuesday reported net income of $2.4 billion in the first quarter, down 19% versus 1 year earlier, after accounting for buyout payments to thousands of salaried employees and some Buick dealers. GM wants to cut Buick dealers by around about 48%. They want to halve the number of Buick dealers in North America. Revenue rose for the company 11% to $39.99 billion in the quarter that ended March 31. Obviously, the majority of that revenue came from two places, China and the United States. GM's adjusted earnings before interest and taxes fell by 6% to $3.8 billion. As in North America, pre-tax profit rose 14% to $3.6 billion. GM's doing well in North America, badly in China. GM sales in the US going up. GM sales in China going down quickly. GM said it was raising its full year guidance for adjusted EBIT to $500 million, to a range of $11 billion to $13 billion. That's a pretty wide range, $11 to $13 billion. After taking an $875 million charge for employee buyouts during the first quarter, the company reduced its 2023 net income forecast to a range of $8.4 billion to $9.9 billion from its previous outlook of $8.7 to $10.1 billion. Basically, the company is saying, we've gotten rid of a whole bunch of employees that weren't doing much. They were working from home. That's exactly what General Motors did. They didn't get rid of their factory staff. They got rid of white collar staff. And therefore, we're reducing our likelihood of our profitability and earnings for the remainder of this year. I think that was a good move from General Motors. It's strange that, GM didn't get critiqued for that or criticized. The media gave them a free pass, but they decided to do that. I would have thought maybe after hearing what Mary Barra had to say about, saying Tesla shouldn't be firing staff and we're not, and then General Motors went and fired staff. Well, voluntarily fired them, but they knew the writing was on the wall. It's sort of a strange and ironic thing to do, to critique one company for doing something and then do it yourself. However, GM also, in addition to that, reported a $99 million first quarter charge for Buick dealers who voluntarily gave up their franchise. Now, it is voluntary, but GM are clearly putting pressure on dealers to say, yeah, we don't really need you in the future. So it's giving them buyouts. Lots of dealers are taking the buyouts. Once again, we delivered strong earnings thanks to healthy customer demand for our vehicles, our intense focus on operational excellence, and great teamwork between GM, our dealers, our suppliers, and our unions, GM CEO Mary Barra said to shareholders. CFO Paul Jacobson said this month that more details about the automaker's progress toward its goal of achieving $2 billion in cost reductions over the next 2 years would be shared on its first quarter earnings call. Jacobson has said GM believes it will reach the higher end of its goal of 30 to 50% of its $2 billion cost target this year, after about 5,000 salaried employees opted to leave the company through voluntary buyouts. We saw continued strong pricing, great inventory management, great demand for our products, Jacobson said on Tuesday on CNBC. Adding that GM also is beginning to get a lot of traction towards its cost reduction target. It's cutting toilet paper. Apparently, you've got to bring your own toilet paper to the office now. Joking. We felt confident after seeing these results, raising our guidance for the full year. GM reported $32.9 billion in revenue in North America, which it said is a first quarter record. That was up 12% from the first quarter of 2022. The automaker's US light vehicle sales grew 18% in the quarter, with all 4 brands posting increases. However, paradoxically, General Motors is losing a lot of money in China. Its car sales have come down nearly 50% over the past 12 to 24 months. It is selling electric cars there now. However, there's just not enough electric vehicle production coming from GM, the brand itself. It's got a real mess in China. That's the truth. It's got 12 different joint venture partnerships. Very confusing to look at the complexity of the company over there in China. And I think what I predicted will most likely come true. Now, I want to know what you think about this. I've said for a while now that GM will become basically a North American car company. It'll sell cars in, the whole continent of America, so Brazil, South America. It sells cars there. It doesn't make a lot of profit there, but it does sell a lot of cars there. However, it will focus on profitability in the United States and Canada. And that is the focus of the company because it knows it can succeed in that market, which it can for sure. Because, it won't be more disrupting Tesla as all these idiotic analysts are predicting. It'll be more disrupting companies from Japan, companies from Europe, brands that are not ramping EV production up in the United States and just not taking EVs seriously, like Japanese car brands who they're talking the talk, but they're not actually walking the walk. They're producing minuscule numbers of EVs worldwide. Toyota, 0.2%. GM are way ahead of Toyota when it comes to EVs in the United States. So I think it'll be pretty easy to just simply take market share from Honda, Toyota, and Subaru. Subaru have 0 plans for EVs in the US. GM said it plans to build 50,000 EVs in the first half of this year and 100,000 in the second half. The company said it's on track to meet its goal of building a total of 400,000 EVs from 2022 through the first half of 2024. Now, GM delivered just over 20,000 electric cars in the first quarter of this year. That means they need to deliver 30,000 in the second quarter of this year in order to meet their targets. Can they do that? I don't know. I mean, the bigger question is probably this. Can they ramp from 20,000 per quarter, so around 6,700 per month, in order to get to their 100,000 for the second half of the year? If they're going to actually deliver on this 100,000 in the second half of the year, that's a lot more cars than they're building now. A lot more. I mean, that's more than double the number of EVs they're currently producing. I really hope that they can do it. Here's what they said. We have the right products and strategies in place to continue to deliver strong results. We have the capability to execute, and that's exactly what we're going to do. And I believe we're going to do it faster than most people think. Well, Mary, I'm not so sure that people think you're moving very quickly. To be fair, General Motors said they'd have 18 electric cars, 18 different models of EV for sale in October of last year. Well, they sold exactly 2 Hummer EVs in the first quarter of the year. In the first 3 months of the year, they sold 2 Hummer EVs. I guess if they can produce 8 in the next quarter, then that would be a pretty tremendous success. Let me know your thoughts in the comments. Thank you for watching.